What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring to all of you this evening. So what we're going to be covering in this update is an analysis of what we saw today. We have some really amazing price action that we were seeing on AMC today. We saw the overall market down almost 4%. The S&P 500 was down almost 4%, and AMC closed down 14 cents, or about 1%. At one point today, as we can see here, we were at $14.20. But again, even though we were seeing a lot of buying pressure coming into AMC today, it isn't going to be able to kind of withstand itself if the market is going to have one of its worst days that we have seen in the recent past. But what we saw today was still incredibly bullish. Now, there are some very specific reasons as to why this happened. So we're going to go over that as well in terms of bond yields. We have some more statements coming out about kind of what is going on with the streaming versus movie theater debate. We have some crazy numbers coming out on the short interest in terms of Ortex and the options chain to look at as well. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, today in particular, you guys saw the amount of success that people were having with the 1348 trading strategy. We have a brand new trading algorithm coming out for you guys over the next week. We alert you guys on over 850 stocks. We give you all of the educational content, over 40 private live streams every single month. If you guys are interested in that, make sure you check out that link down below. So again, today we saw AMC close at $12.76. Now, before we kind of go into the overall market driving moves and what we're seeing here and what this could potentially mean going over the next couple of days and weeks, let's take a little bit of a brief look on AMC on the 4-hour time frame. This is kind of what we're looking at here. In order for me personally to determine when I am going to be buying some more AMC calls, where we could see a potential pretty significant run. So we're hovering right now right around this 48 EMA on the 4-hour time frame and the 13 EMA. Now, we are kind of looking for that cross here, and we need to get those closing candles above the 200 EMA as well in order for that to really meet a lot of the rules that we are trading with. But we are seeing a little bit of some signs of a reversal here. So these are some really good things that we have going forward, and especially with the action that we saw today, with AMC only being down 14 cents and the overall market being down almost 4%, that's some really solid news. Now, let's kind of take a look at what we have going on in the overall market today, how this affects AMC and the overall market going forward. And we're going to give you guys a little bit of a lesson on something today. So we saw Powell speak yesterday and we saw the market pop. If you guys were listening to me on stream, what we were saying was, well, the last time that we saw the market really react positively to Powell, the next day was pretty red. So I entered today with a SPY strangle. That ended up doing pretty well, but that's not the key point here. There's another reason for why we were seeing this move down, and it has to do with bond yields. So the 10-year treasury right here, we can see it opened this morning and it had a high of about 2.98%. Now, this bond yield throughout the day ended up falling very significantly. Now, if you don't understand the bond market and the relationship between equities, stocks, and bonds, there's a very key relationship. Now, when you think about bonds specifically, when you see bond yields drop, overall bond prices are increasing. That means that money is flowing in bidding up these types of securities, which is increasing the value of them because there is a higher demand. Now, think about this a little bit further. If there is more demand for bonds are typically going to be a quote-unquote safer asset in times like this. So what we saw today and what we've been seeing for a while is a flow of money out of equities or stocks and into bonds. What this is showing us is that a lot of these institutions are still going very risk off. Now, in addition to this, we also have some other things to talk about with kind of the fundamentals of the movie theater industry and the streaming industry. So when we come over here, remember yesterday we were talking about how Netflix was looking to release more movies in theaters with a 45-day exclusive theatrical window. Again, mainstream media has no idea what they're talking about. They are pushing a narrative that is absolutely untrue about the movie theater industry being a failing industry. And we can see here, Top Gun Maverick, Tom Cruise vetoed a streaming premiere, a movie that needs to be seen on the big screen. everybody knows that the movies are going to be doing better if they get released in theaters. So the fact that mainstream media obviously has a narrative to push, well, we're seeing this kind of get collapsed on them as we speak. We have the Netflix situation. We have this Tom Cruise thing. We have, I believe, the parent company of HBO, I forget exactly what their name is, has that 45-day exclusive theatrical window with AMC right now. All of these things, combined with what AMC is doing kind of outside its normal theater operations, is really, really solid news going forward. Now, let's bring up some of the Ortex updates right here really quickly. So we've got 21.96% estimated short interest on AMC right now. We've got 4.33% max cost to borrow, stepping up pretty significantly here. 2.63% average cost to borrow. And the key thing that we have to look out here is the shares on loan. 157.87 million shares on loan with an additional net borrow today of 1 million shares. Now, what does this mean for us? They continue to borrow shares on AMC. They continue to try to push this thing down. Well, once these shares end up getting sold into the open market, it's going to be a lot more difficult for them to, one, get more shares because they've basically taken out all of the shares. So we were talking about this today on the live as well, that we're kind of, as retail investors and people who are bullish on AMC, are kind of looking at two enemies when we are looking at the price action. We're looking at the short selling pressure coming in and institutional or potentially other retail selling pressure coming in. If that shorting pressure coming in starts to come down, we see a little bit less volatility and our buy orders actually having more of an effect. And that's kind of what we're seeing with AMC right now, with 30.62% of the free flow on loan. Now for GameStop over here, 19.83% max cost to borrow, which is getting up there, and 25% estimated short interest. That is very, very high, especially after today when they borrowed an additional 769,000 shares. Average cost to borrow today on GameStop, 12.08%. You'd have to be absolutely insane at these prices to be taking out loans of shares of GameStop to short it at 12 to 19%, or even potentially higher if we are not seeing the total data here. Now, the last thing that I kind of want to go over with you guys in this update is some of the things that we're seeing on the options chain. So again, we are outweighed to the put side on the options chain right now. So we have 90,000 put contracts in the money and 27,000 call contracts. But again, if we start to see those moves back to the upside, we get those calls in the money. 257,000 call contracts are out of the money right now. And we get those put contracts out of the money too, which is going to lead to those double buys that we have been talking about for a very significant period of time. Now, when we take a look at some of those specific price levels where we can see some of these types of unhedging and hedging happen with the options chain, specifically for AMC on this week, which is a monthly options expiration period. Yep, 13 is going to be a decent level right here. 14, another decent level. We get basically another 30, 40,000 contracts right here. An additional 18,000 at 15. So slowly stair-stepping our way up would be a very, very solid way to go. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next one.